In this video, I'll break down exactly how I made about $3,000 trading SUI. Now, I did this using one of my favorite strategies, which also means that in this video, you get a chance to see what strategy I use and how I execute it. So, the first thing that we'll look at is an hourly time frame on SUI. You see, I am a day trader. I like to start on the higher time frame. And in this very example, I knew exactly what I was looking for because I'm familiar with the market maker models. A market maker model is an ICT concept. And before we get into the actual strategy here, I want to break down exactly what that is. So we have two types of market maker models. We have what we call a market maker buy model, which again is where we are looking for longs. Then we have the opposite of that, which is a market maker sell model, which is again where we look for shorts. Now, what I'm drawing out here is a market maker sell model, okay? And we will go over exactly why that is in just a second. So this right here is an example of what a market maker model should look like. We have what we call the buy side curve, okay? Now, the buy side curve is what you're seeing right here, and this curve is where the market engineers sell side liquidity. Now, that's important because that is why we even get the sell side curve in the first place. So, during a market maker sell model, the one on the left is a buy side curve, the one on the right is a sell side curve, and we of course want to look for our entry during the sell side curve. So, again, the whole idea here is that the buy side curve engineers sell side liquidity for the sell side curve to come down and accumulate. Now, during a market maker model, we have a first stage distribution, and then we have what we call a second stage distribution. So this right here, I will make it a different color so that you can differentiate a little bit easier. The first one here is what we call the first stage distribution. And again, this one here is what we call the second stage distribution. It's essentially two consolidations, and you can expect it to happen during a market maker model, which again means that these consolidations is exactly where we want to look for our entry. We obviously do not want to find our entry during the sell-off, which we're seeing here, because we might get a bad fill, we might get left behind, and all these things. So we of course want to find our entries in these consolidations right there. Now, me myself, I always recommend that people look for their entry in the second stage distribution, and there's a real good reason for that. It's essentially because when you enter in the second stage distribution, you are way more confident that it is actually a market maker model that is playing out. Because if I now enter in the first stage distribution, I have only seen this very pattern repeat once. The pattern I'm talking about is, of course, consolidation, displacement, consolidation, right? I've seen it happen once, but if I now wait for another displacement and we get a third consolidation, well, then the chances of us seeing the last displacement leg here is a lot higher. So I always tell people that they should use the first stage distribution as sort of a tester, right? Because again, if we see the consolidation here, well, then there's still a decent chance that it could continue higher. But if we now wait and see the second displacement leg, well, then there's a very good chance that we are going to see that third displacement leg if that second displacement leg is followed by yet another consolidation. So we use the first stage distribution as sort of a tester, right? We don't really want to enter yet. We want to figure out if it's actually a market maker model. Now, again, if it's a market maker buy model, you simply just flip it and there you have a market maker buy model. So now that we've gotten that out the way, let's actually go ahead and break down the SUI trade from this morning. Again, what we're looking at here is an hourly time frame. Okay, I often trade in between the 1 and 5 minute time frame. That doesn't mean that I'm not utilizing higher time frames. It just means that I like to execute on the shorter time frame. Does that mean that it's better to execute on the lower time frames? Absolutely not. It just fits my personality a lot better because I tend to be a little bit less of a patient person when it comes to the markets themselves. And so by scalp trading, I allow the position to be done fast, which means there's less emotion involved from my side. Now, again, what I noticed here on the hourly time frame is that we had the consolidation, which again is what we call the first stage distribution. You see, what a market usually does when it is indeed trending in a certain direction is that it will get actual follow through above these external range highs. So if this was truly a bullish market, well, then I would expect to see a lot of follow through once we actually hit the high. But right here on SUI, I saw the exact opposite, right? We saw absolutely no follow through, but we did in fact see follow through to the downside. So one of the easiest ways of confirming trends or confirming order flow is simply by looking at displacement. So again, in this example, do we have any displacement after hitting the high? Do we have any follow through to the upside? No, right? We have absolutely no follow through to the upside. Now, do we have follow through to the downside? Absolutely, right? We have all of this price action right here, which again is what we call displacement, and that's exactly what we want to see. So TLDR, because of what we're seeing, this right here is probably a liquidity sweep, and it is not a high that is going to cause a sentiment shift. Now, what we also see is that we have quite a nice target for this market maker model. Not only do we have a low right there, but we also have two lows that we're seeing right here. So again, if you're familiar with ICT, what the market does is that it moves from liquidity to liquidity. So the market ran up, swept buy side liquidity. Now we can anticipate the market to go down, sweep sell side liquidity, and then maybe if the market wants to, well, then it can rally higher again to go ahead and sweep that buy side liquidity again. That right there is essentially how a market moves, explained in ICT terms. Now, again, I told you I'm not executing on an hourly time frame, but that doesn't mean I won't use it for directional purposes. So what we're going to do now, because I've figured out the direction of the trade that I want to take, which again is going to be a bearish trade based off of the market maker sell model, is jump right onto a 1 minute time frame, because that is actually where I executed this trade. Now, if you're wondering what exchange I used to execute this trade, it is called toobit. Now, toobit is a great exchange. It offers some of the lowest fees in the industry. And right now I can offer you 50 USDT by simply signing up with the link below. So if you're looking to change your exchange, or maybe you just want some free cash, well then toobit is your answer. And again, you can find the link down below. Let's break down exactly how I executed this trade. So what I like doing is finding a market maker model on a higher time frame and then zooming into a lower time frame and then finding a lower time frame market maker model in the same direction. So I'm essentially taking advantage of two market maker models in one. I identify a higher time frame market maker sell model, I drop down to a lower time frame, and then I wait for one to appear there. That is exactly what I saw on the 1 minute time frame. So the market rallied up, and just like before on the hourly time frame, I paid attention to how it reacted to hitting the high. Now again, did we see any follow through when hitting the high that we're seeing here? Absolutely not. We saw no follow through to the upside. Now, did we see any follow through to the downside? Absolutely, right? We saw a bunch of follow through and a bunch of displacement to the downside after sweeping the high. So very much like the example given on the hourly time frame, it's basically the same thing appearing here on a 1 minute time frame. Now, what I was waiting for here was some sort of consolidation. Right here, we created an order block. And if you're confused as to what an order block is, it is essentially an oddly placed candle, okay? And what I mean by that is this. We have a very bearish market. Now, all of a sudden, we created a bullish candle in between two bearish ones. And that right there is your bearish order block. So what I was going to do is short that order block, which means I entered at the body of the candle. Now, some people will tell you that they're going to use a wick of the candle for their order blocks, but I do not agree with that analogy whatsoever. So again, some people like to draw their order blocks like this. I fully disagree. I do always think that you should enter off of the body, and that's simply based off of experience. So again, my entry was the order block, my stop loss was the order block high, and my take profit was the low that we're seeing down here. So let's go ahead and play it out and see exactly what ended up happening. Now, as you can see, it just played out picture perfect. Now, this market maker sell model only had one consolidation, and that will happen sometimes. Just because we expect a first and second stage distribution doesn't mean it has to happen. But because we had ran this low and we had not created a consolidation yet, if I then got a consolidation before the market swept this low that I was targeting, well, then I would enter off of that consolidation because the market had already moved down that low, so I wasn't really expecting two consolidations to happen. And so that right there was the trade of the day, and it was beautiful. And again, it was executed using the market maker model analogy. So hopefully you have a little bit of a better understanding in terms of market maker models now. Go ahead and try and apply it in the actual market. It is just one of my favorite concepts, and you can apply it to any system that you're already trading. So thank you a lot for watching the video. I hope I helped you out. If I did, make sure to like the video and subscribe to the channel, and I'll see you in my next video.